Let me ask you a question. Is your tax return being read by a robot? I know, it sounds like something straight out of a sci-fi movie, right? But what if I told you it's already happening?
That's right. For millions of us right here in the UK, the very first set of eyes on our financial affairs isn't human at all. It's a powerful algorithm. This isn't some far-off future prediction. This is the reality of British taxation today.
Understanding this huge shift is absolutely critical. And that's why we're so glad to bring you this discussion, which has been developed by the top experts over at My Tax Accountant. They are right there on the front lines of this digital revolution.
Today, we're going to be looking at exactly how you can navigate the future of UK tax, with a special focus on the AI-powered audits that are now being used by HMRC.
So, what's our game plan? First, we'll introduce you to HMRC's new AI detective. Then, we'll ask a really important question. Can an algorithm actually be unfair? We'll also unpack the dangers of the black box, lay out a practical action plan for you, and finally, we'll talk about why a human expert is now your most important ally.
All right, let's jump right into part 1, HMRC's new AI detective. This is all about getting to grips with the seriously powerful tool that's changing the entire game of tax compliance in the UK.
So, meet Connect. That's the name of HMRC's supercomputer. The best way to think of it is as this incredibly powerful, all-seeing digital detective. Its one and only job is to crunch massive amounts of data to spot patterns, flag anything unusual, and find potential underpayments of tax. And the amount of information it sees is, well, it's staggering. Connect doesn't just glance at your tax return. Oh no. It pulls in data from your bank, your crypto accounts, info from tax authorities in other countries, your sales on places like eBay or Etsy, and even property records from the land registry. It sees a much bigger picture than any human inspector ever could.
And the speed and scale we're talking about here is just immense. Connect can whip through thousands upon thousands of tax filings in the time it takes you to make a cup of tea. It spots these tiny little inconsistencies that would be pretty much impossible for a person to find. The old days of random audits, they're being replaced by this constant AI-driven supervision.
Let's make this feel a bit more real. Imagine a guy named Ben. He's a freelance web developer based in London. He does his self-assessment and declares his income. But Connect can instantly check that number against the actual money hitting his business bank account, the projects he's showing off on his online portfolio, and even data from the US about his American clients. If those figures don't line up perfectly, boom, a red flag is raised in an instant.
Now, all this power and efficiency is one thing, but it leads us to a really important question. So for part 2, let's ask, can an algorithm actually be unfair? We're going to explore the risk of something called algorithmic bias. So what on earth is algorithmic bias? Well, think of it like a glitch in the system's sense of fairness. It often crops up when an AI learns from old data that's already full of human biases. So, for example, if a certain group of people was audited more often in the past, the AI might just learn that pattern and keep doing it, creating this unfair cycle without anyone meaning for it to happen.
The UK's Equality Act of 2010 actually talks about 2 types of discrimination. Direct discrimination is the obvious kind, like flagging every taxpayer over 65. But indirect is way more subtle. Imagine an algorithm is told to flag transactions with a specific country. Now, if lots of people from that country live in the UK, the algorithm could end up unfairly targeting that ethnic group, even though it was never told to look at ethnicity at all.
And this really gets to the heart of a problem, which was perfectly put in a government review. Algorithms are incredibly consistent. You don't have to worry about them having a bad day, but they have zero intuition. They just can't understand the messy, nuanced context of your life. A sudden family emergency, a big one-off business expense that looks odd but is totally legitimate. To the algorithm, it's just data that doesn't fit the expected pattern.
This lack of nuance leads us right into our third section, the dangers of the black box. This is all about what happens when you can't see how or why a decision was made about you and your finances. Stay with me, this next point might surprise you.
So we use this term black box to describe a system where you just can't see the inner workings. And there are a few reasons for this. Sometimes it's about commercial secrecy. The tech is a company's valuable secret recipe. A lot of the time, the math is just so incredibly complex that you can't really explain it in simple human terms. And of course, HMRC is worried that if they showed everyone the rules, fraudsters would just learn how to cheat the system.
And hey, did you know this isn't just a theoretical debate? A UK legal tribunal actually ordered HMRC to be more open about how it uses AI, specifically for R&D tax credit claims. The court basically said that for the public to trust the system, there has to be accountability. It forced a little crack of light into that black box.
Okay, so we've seen the power of the AI, and we've talked about the potential problems. So what can you, as a taxpayer, actually do about all this? Let's move to Section 4 and build your digital-first action plan.
It really boils down to 3 simple, key steps to stay safe in this new era. Number 1, adopt digital tools yourself. Use good accounting software to keep everything neat. Number 2, maintain absolutely flawless records. Remember, the algorithm loves clean, consistent data. And number 3, be proactively transparent. Don't wait around for the system to find something.
Okay, here is a pro tip, and honestly, it is so important. Always, and I mean always, use a dedicated bank account just for your business. Mixing your personal and business spending is one of the easiest red flags for HMRC's AI to spot. It just creates messy data, and messy data triggers audits. That's not all. Here's where most people go wrong.
Where people go wrong is thinking they can just carry on like it's 2010. The entire foundation of tax enforcement now is what we call digital-first compliance. The rules of the game have changed. The winning strategy is simple. Give the system clean, clear, transparent data before it even has a reason to ask you for it.
And that brings us to our final and maybe our most important section, getting expert human advice. You know, in this age of automation, having a real, skilled human advisor is more critical than it has ever been.
And this is the bottom line, really. An algorithm like Connect is a master at spotting patterns. It can find a needle in a digital haystack. But what it can't do, what it will never do, is understand your story, your business, your life's unique context. A human expert does that. They are your translator and your advocate. They make sure that when the machine asks a question, the answer it gets is correct, it has context, and most importantly, it's fair.
Now, just before we wrap this up, a very quick but very important note. The information we've gone through today is for general guidance. It's not designed to be your sole source for making financial decisions.
So before you make any decisions, you really must consult with tax experts. For professional, tailored help with AI-powered audits and any other tax issues, the team at My Tax Accountant is there to help you navigate this complex new world. You can reach them on 0208 570 8531, or you can drop them an email at info@mytaxaccountant.co.uk. Don't leave your finances in the hands of a black box.